off the table, but where's the safest place to put your money to work in this environment? For more on this, we're joined by Jay Bala, Senior Portfolio Manager at AIP Asset Management. Jay, good to be with you. Thank you for coming in.
Thank you so much.
So let's start with why you think it's a good time to take some risk off the table.
Well, if you look at corporate earnings has really been driving the stock market for a very long time. And if you look at this quarter's earnings, I mean, that's a historical figure, right? It's looking at, well, how did Q2 do? And Q2, the underlying fundamentals of the economy have been great. You've had strong growth globally, and you haven't had a lot of problems. But if you start looking at forward guidance, and that's what everybody's banking the valuations off, right? I mean, everybody's saying the market's not overvalued because 2019 earnings are robust and they're going to continue to be strong. But nobody's factored in things like tariffs. Nobody's factored in inflation. And if you look at all the earnings calls, I mean, they're talking about wage pressures. That's something that nobody really thought about, right? And so, I mean, if you put all that together, what you're going to see is I don't think they're going to hit the 2019 earnings targets, right? And on top of that, you've got tariffs, you've got inflation fears, you've got a rising interest rate environment. So that's going to all slow the global economy down. So what I'm saying is, it's time to start reallocating your portfolio to say, look, I'm willing to risk X amount and put that in something that's going to be high growth and it's going to work out. Hopefully that's well for you. But, time to sort of lock it down and have a little fortress defense and say, look, 80% of my capital is sitting in super safe assets. And if the 21 is great, if it doesn't, I've at least got sort of a holdback position, right? Like at least I can reload after that, because what people don't seem to understand is it's very difficult to recover from a 40% loss.
Right.
Right? Or like if you lose 50% of your money, you need 100% return. That takes you like 5 years to get your money back, right?
Or a decade. I mean, it does, right? When we take a look at the previous financial crisis, and I was having this conversation with some people this morning outside of work, and the issue, of course, is whether or not and at what point you hit that panic button, right?
Exactly.
If you hit it when you're down 30%, you've kind of lost versus waiting it out.
Exactly. And what we're saying is, look, I mean, buying insurance at this point, it's relatively cheap because the market's priced well. So if you were to go out and just start buying even put options on an S&P or a TSX, I mean, at least that's going to safeguard you from a very large down drop if that were to come, right?
Right. So let's talk about this a bit, to be specific, as it relates to U.S. versus Canada. You're taking this view broadly.
I am.
Okay.
I mean, I don't think... I mean, Canada's such a small part of the market. At the end of the day, even if Canadian earnings came out amazing and the U.S. market tanked 40%, we'd be down too, right? It just wouldn't matter. I think it'd just be sort of a risk-off globally. I don't think there is... I don't think global diversification exists anymore, to be perfectly honest, right? I think if, the EU tanks and England tanks, we're going down with it. It's just the way the world works nowadays. There is no more real... I own stocks in Tokyo, therefore I'm somehow sheltered. It doesn't really matter anymore.
Do you feel the same way with respect to China?
No, China's still in the emerging market category.
Well, is it really?
I mean, it's still got the growth rates. If you look at per capita income in China, it's still about 1/3 of where we're at. So, I mean, they've still got room to grow. Also, they've got somewhat of a unique market in that the government plays a big part in their stock market, right? So
then do you shift? So what you're talking about, though, in terms of de-risking, do you want to, and because you manage separate accounts for individuals, but you also have a hedge fund.
Correct.
Are you putting more money to work in China, almost as a bit of a hedge against what you're talking about here from a more developed market perspective? No,
we wouldn't go down the China path. I mean...
You're not going down China?
Yeah, not right now, because the emerging markets have been selling off heavily. I mean, even if you look at the exchange rate with China, I think their currency is down about 10%. That's just way too much risk to take on at this point.
Okay.
Places we would place risk, weirdly enough, I would still put it in the cannabis space. And the reason I say...
In the cannabis space?
Weirdly enough, no, for your risk capital. So if you've allocated, say, 10% to risk, stick it in something where you know the market's going to grow, right? And the example I give is prohibition, right? No matter what you bought as a stock in, say, the 1930s, an alcohol stock of any kind, the market grew, right? I mean, the one undeniable thing is, from that time to today, the market's grown, it's grown exponentially. There's going to be winners and losers in that, so you have to go and sort of cherry pick which ones you want to pick, but at least you know there's a large amount of growth coming.
We think there is. Why are you so confident that there's a large amount of growth?
I mean, same way. I mean, like when they legalized alcohol, more people started drinking. It became more accessible, right? And the market just grows. I mean, once you legalize something, more people will do it. That's just a fact. Prices will come down.
What stocks do you like in the cannabis sector?
I guess I like more of sort of the small cap where I think there's sort of a value creation. So this is my theory on sort of the whole cannabis environment, right? So back in the 30s, if I gave you alcohol of any kind, you would consume it. Then they legalized it. And then you said, no, wait a minute. I want Belgian beer. I want my wine from Italy or France. And, I only want specific stuff. And I think weed is going to be the same thing, right? I think right now we have an undersupply of legal weed. You're going to legalize it, and you're going to have an oversupply. And then you're going to have a whole bunch of people saying, hey, wait a minute, I don't just smoke any weed. I want this because it's marketed right. Snoop Dogg smokes it. Popular people do it. And therefore, that's what I want.
Okay.
And we're looking at companies, like sort of like a Revilium Technologies, which is building out a warehouse, but they have sort of an interesting idea. It's basically you carve it out into, say, 10 or 20 little segments. And everybody gets to grow their own strain of weed. One of them is going to take off. Mm-hmm. And the whole idea is you're going to take an equity interest in each grower, right? They're going to pay you a base fee. And whoever wins that battle, you basically allocate more space to them.
Revilium Technologies.
Correct. It's a tiny stock. I mean, we don't hold a massive position in it, but...
Okay. What about some of the larger cannabis companies?
See, the larger cannabis companies, I always say, is, where's the value? Everybody knows them. They're super liquid. And they're producing basic stuff. They produce weed. They don't produce anything specific. Okay. Right? It's just bulk material. I mass produce this stuff. Would you like to consume it? Now, someone's going to be sort of a Budweiser out of all of this.
Right. Who's going to be the Budweiser?
That's a tough call to make because we still don't know how it works out once they legalize, right? And so we don't know what weird taste becomes the norm. And so I think we're far away from figuring out, and I think everybody's thinking, like a Canopy or one of the bigger ones. And the honest answer is, I don't think we were there yet.
Okay.
Yeah.
What's the ticker on Revilium Technologies so we can bring it up?
RLV.
ROV.
RLV.
RLV. Okay, if we want to bring that up from the control room. Just coming full circle here, though, away from cannabis, and if we've got a lot of viewers who I think we do, that own the telecom companies, that own the financial companies in Canada.
Right.
What do you do with those stocks here?
And again, those are the easier ones because you do hold them, right? Those are your long-term holds. Those are your core holdings. So you hold your banks, you hold your telcos, you hold your pipelines in your oil companies. But all we're suggesting is start buying put options on them.
Start buying put options. Okay.
On the index itself, because, look, the index is basically three segments, right? It's oil and gas, mining, and financials, and some industrials. So just by buying simple puts and rolling those over, they don't cost a lot. But at least you can say, look, if the market were to tank 30%, I'll be down 10. At least you're blocking it, right?
Yeah, understood. Okay, Jay, great to be with you today. Thank you very
you.
much.
No
That's
problem.
Jay Bala, Senior Portfolio Manager at AIP Asset Management.